Hello, grads of FinLearn Academy and fellow traders. Uh, we have seen upswing. Post that upswing, market is currently consolidating, and it's a range-bound consolidation. So whenever you see markets into a consolidation mode, like right now, currently we are in with respect to the last high and the low, we need to see where the strength will come and when the weakness will come. See, we all know that this low around here is the consolidation base. Give me a minute, I'll change my settings. And near this consolidation base, we have a 200-day moving average on Nifty. And 200-day moving average by currently is an important consideration. Why? Because prices are trading or crisscrossing around those levels. So I'll plot my 200-day moving average. It is there. So if you see all this decline post this rise have all taken support at or around the 200-day moving average. Right? Uh, Let me remove this. Suppose this rise, there is a gap and a 200-day. So last full week, what we have seen is market consolidating with support at 200-day moving average around 17,000 level. So once market has taken a support around this level, we need some confirmation whether this upswing will continue from here on or not. See, consolidations are very tricky to trade. Why? Because for consolidation to trade, we need confirmation. And confirmation is break below this low, we can see correction unfolding. Break above this high, break above this high, and we will see a price rise towards 17,800 odd levels. So traders, see, as a day trader, you can trade this range, but as a swing trader, we need to clearly see break above this range and break above this trading band, which means that your 200-day moving average becomes your stop loss or risk management levels. If it breaks on the upside, then the next logical target is this high from where prices decline, which is around 17,800 levels. If it breaks the 200-day moving average, the trading support can be considered around this gap area. You can see clear gap over here and a base. So market cannot another week spend in this band. We will see either a break above the range or break below the range. So as a trader, break below the range, we will see 16,700 odd levels. Break above the range at 17,400, we will see 17,800. So market is in a consolidation, and consolidation, the rule for consolidation are very simple. We wait for the band to break. If it breaks on the upside, traders are long. If it breaks on the downside, traders are short or wait for the decline to next support to go long. Yeah, but repeated test and break of 200 DMA, you can see it over here, does trigger a good amount of decline or some amount of panic selling, what we see here. So I would say for long traders, wait for confirmation and break above this consolidation band. So that was Nifty. Let's go and check Bank Nifty. See, Bank Nifty is weaker than Nifty. Why? Because Bank Nifty, if you see on a multiple occasion, once it broke below the 200 DMA, once it failed to cross the 200 DMA, again there was a pullback, it failed to cross the 200 DMA, it dipped down. Again, it tried to make an attempt to cross the 200 DMA but failed here. So Bank Nifty clearly it's like a Lakshman Rekha for the bulls. Till this is not crossed, let's not be too bullish on Bank Nifty. we will see a consolidation with the 200-day moving average on the upside. And if I change it to the line chart, we have a swing low around here. I go to Japanese candlestick, and I would take this entire gap around this gap first filled as this support. So Bank Nifty likely to remain range bound between 36,000 to 34,000 levels. It is lacking momentum. Right now we are seeing it in the grip of sellers. Why we are saying that? Because so far it has not crossed the 200-day moving average. So there is no clear sign of strength as far as Bank Nifty is concerned. Yeah, if it crosses the 200 DMA, we will see a rise towards these highs. But for that, we need confirmation. We can't trade in anticipation that it will cross the 200-day moving average. So both Nifty and Bank Nifty are confined in a trading band. And for Bank Nifty, the area for strength will be break past the 200-day moving average, or we are likely to see consolidation with high intra-week or overnight volatility. That's for the weekly update. We wait for confirmation on the upside for Bank Nifty and Nifty by breaking the consolidation band, or be prepared for a choppy range bound market going forward next week. But you see, short term consolidation don't extend beyond a week's time. Already, we have seen this week prices or markets spending enough time in a consolidation. So that way, be prepared for a trading or a swing up or swing down, what we typically call a breakout. And you clearly know the levels for Bank Nifty 200-day moving average. For Nifty, the upper end of the trading range at 17,400. Same way, you know the levels on the downside. Nifty breaking the 200 DMA, you will see a decline, and Bank Nifty can slide towards 34,000 levels. So make a note of it. Till Bank Nifty not crossing the 200 DMA around, I'll drop a line for you to note down the levels. 36,700. You will see a choppy consolidation continuing. So markets are not decisive at the current phase. This week we have spent in consolidation, and short-term consolidation typically don't last more than a week. So we have spent this week in a consolidation. So next week we can expect a directional move up and down. So it's a week for breakout traders. Next week, trade the direction of the breakout. If it breaks on the upside, long. This is Nifty chart. If it breaks on the downside, short. And you know your stop losses. See, if you're buying a range, your risk management on the long is the lower end of the range. If you're buying the breakout on the upper side, if you are selling the breakout on the lower side, your risk management levels is the upper end of the trading band. So that's the weekly update on the broad indices, Nifty and Bank Nifty.